Limited. The past year has been one of steady progress for us. Even in a challenging market, our company has moved forward with confidence. Our steel division continues to serve India infrastructure needs, while our frozen food division is reaching more homes across India and overseas. Together, these two business provides us with the balance and long-term strength. On the financial front, the company delivered consolidated revenue 401.21 crores and profit after tax 32.6 crore. On a standalone basis, revenue was 403.83 crores, with the profit after tax improving 4.64 crores compared to 3.13 crores last year, a sign of strong efficiency. We would like to place on record our sincere appreciation to our Honorable Prime Minister and Honorable Finance Minister for the recent GST reform. These measures are a significant step forward and are expected to unlock new avenues of growth, enabling our company to achieve gather milestone in the year to come. I sincerely thank our employees, customers, partners, bankers, and your valuable shareholders, our valuable shareholders for your continued trust. With your support, we remain committed to growth, innovation, and creating lasting values. Together, let us build a brighter tomorrow. Thank you.
Thank you, sir, for your insightful and inspiring speech. We value your perspective and guidance on the matter discussed. I now request Mr. Anand Goyal, sir, the Managing Director of our company, to address the member and share the key highlights.
Gentlemen, it is a pleasure to address you all at the 35th AGM of Shri Bajrang Alliance Limited. On behalf of the management, I thank you for your faith and partnership in our journey. Regarding steel division, our core strength highlights are, in this financial year 2024-25, we supplied over 0.44 lakh tons of high-quality structural steels to various projects of national importance, including Indian Railways, transmission line towers, etc. We are progressing towards approval with Suzlon Energy for supply of heavy structural, just like heavy angles, to build towers for wind turbines, and Sterlite Power Transmission, which hold promising prospects for the coming years. To prepare for tomorrow, we have already outlined capacity expansion with some capex and process enhancement for 2025-26. Steel is our foundation, our contribution to India's infrastructure and nation building. Regarding frozen food, marketed as gold brand, expanding its horizons. Exports grew 42% year on year, with its presence increasing in UK, Australia, GCC, North America, and other EU countries. Domestically, we have expanded our reach through Swiggy, Instamart, Zepto, Big Basket, and Blinkit, driving 27% growth in sales. Horeca sales have also grown by 35%, supported by strong professional trust. Our frozen food plant is now powered by solar energy, strengthening our sustainability promise. Gold is not just a brand, it's a culinary movement, carrying India's taste and quality to the world. for financial 24-25 has been a year of resilience and recognition. With steel driving India's progress and gold gaining global trust, Shri Bajrang Alliance is better positioned than ever. At this juncture, I wish to acknowledge and thank our Honorable Prime Minister Shri Narendra Modi ji and Finance Minister Srimati Nirmala Sitharaman ji for bringing in the new GST reforms. Such progressive changes will strengthen the business ecosystem, enhance operational efficiency, and propel our company's performance to newer heights. We remain committed to disciplined growth, transparent governance, and sustainable practices. With your trust, we'll continue to build long-term value for every stakeholder. Thank you so much.
Thank you, Anand sir, for sharing the key highlights of both the divisions with us. I now request Mr. Archit Goel sir, whole-time director and CFO of the company, to take us through the agenda items. Archit sir.
Dear members, a very good evening to all.
We broadly classify, that though you raised around 5 questions, I broadly classified under revenue mix and margins, then frozen food segment and demerger. Okay. Number one, our business is diversified across steel, frozen foods, food trading, and chemicals. Steel remains the largest contributor, but the food and food processing business is steadily gaining traction. Margin differs significantly. Steel being cyclical, but stable margins. Frozen foods and food manufacturing structurally higher margins, and we are trying to scale the desired scale. We intend to highlight this in our upcoming investor communications, subject to SEBI LVDR regulations. Coming to other capacity and the frozen segment, we have sizable processing capacity already in place, designed for both domestic and export markets. Current utilization is moderate. The strategy is to gradually ramp up through exports, B2B, and HoReCa channels. And as regards your question on CapEx, no major new capacity announcement, though we will incur routine expansion expenses relating to efficiency-related investments. As regards the funding, as of now, no this one. But however, CapEx will be funded as our cardinal policy through internal and, if required, a judicious mix of debt and equity. And though we are not supposed to make any forward-looking statements as per SEBI LODR, yet, considering your concern, we would say that our Goel brand has a long-term potential in both B2C and B2B, and management remains committed to scaling it going forward. And as regards another question, demerger, at this stage, we are focusing on strengthening operations and improving utilization of existing food facilities. A demerger or separate listing is an option the board may evaluate at an appropriate time, depending on scale and investors' appetite. However, again, to re-emphasize and to reiterate, our focus is value creation through growth and not structural changes. Hope I've addressed all your questions. Thank you so much.
Thank you, sir. I now invite our next speaker for the event, Abhishek, sir. Abhishek, sir, you're in the panel now. You may speak.
Can you hear me, sir? Am I audible?
Yes, sir.
First of all, I congratulate the management on the eve of annual general body meeting. Sir, trust all is well with you and your family in this challenging situation. Our company deserves much more respect than the current market cap after completing more than a decade of successful operations, profitability, and becoming one of the strongest brands in the respective sector. Sir, what are the steps being taken by the management to reduce the other expenses, legal professional charges, and the audit fee? That our company is being categorized under the ESM Stage 1 category. So, what proactive steps the management taking to overcome the same in the coming future? So, what are the steps being taken by the management to improve the EPS, P ratio, and the return on equity? I would like to know from you, sir. And after 2008, The shareholders are not getting any dividend from the management more than a decade. So what steps have been taken by the management to reward the minority shareholders in the years to come? And what are the steps taken by the management to conduct on-call, quarterly presentations, and meeting with global investors on a regular basis? And the company is doing good performance, but still no dividend investor fraternity. When will the company be in a better position to reward the minority shareholders in the years to come, sir? And hope that the company takes all our questions in the right spirit and nothing much to ask. I wish the company and the board of directors a great success and prosperity in the coming future. And thank you for giving the opportunity, sir. Hope to see you in the hybrid AGM next year. Thank you very much, sir.
Thank you, sir. I now invite our fourth shareholder for the meeting, Keshav Garg.
On forward looking. So whatever provided under SEBI LODR, let me try to give convincing answers to all your questions. Number one, growth outlook. We expect steady top line growth driven by both steel and foods. Steel will continue to provide scale, while frozen foods and contract manufacturing will drive margin expansion. The food division is expected to move with the desirable and expected margins. And main growth drivers over the next 2-3 years, and again is a forward looking, but limiting and in accordance with LODR, our major growth drivers will be scale up of frozen food exports, expansion of B2B and HoReCa, contract manufacturing partnerships. Coming to your another specific questions about the dynamics of B2B, HoReCa, and Nizzle partnership. B2B and HoReCa, we supply frozen foods, ready to eat products, and special items to hotels, restaurants, catering companies, and institutional buyers. We are building an order pipeline with both domestic and export customers. Some names are totally and purely under confidentiality, yet they include recognized brand in hospitality and retail. And touching upon Nestle partnership, the arrangement is progressing well as expected, as it is said. While contribution in FY25 was meaningful, it is expected to grow in FY26. Over the next 3 to 5 years, again forward looking, but limiting to that, we aim to scale significantly, though it will be premature to quantify revenue as of now. Margins are expected to improve with volume, though benchmark levels like Hindustan Foods may take a little bit time to achieve. Contract manufacturing, yeah, we remain open always to adding new clients, and discussions are on pipeline. Segmental performance and financial. Segmental revenues will be disclosed in an annual report and investor presentation, again subject to the boundaries of mandatory norms. I raised a specific question on decline in customer advance from 44.5 crore to 37 lakhs. Again, we want to make it very clear. It is due to a shift in contract and payment terms with key buyers. This does not, again, underline, this does not indicate a demand issue. Then, key constraint to scaling, always achieving consistent capacity utilization and securing long-term export orders, etc. But we will be hoping positively that with our very efficient professional backup and experience and expertise, we will be successfully negotiating those concerns also. Then, investment in group companies, few questions you have raised. Subsidiaries, both subsidiaries are engaged in complementary business that support our core operations. Okay. Stake in Shri Bajrang Corn Chemical Distillery, again you have mentioned. These are strategic long-term holdings. We continuously evaluate monetization. Our board will always believe in realization will be greater in future. Corporate guarantees also you have mentioned. Guarantees to group companies, of course, reflect our deep commitment and our role in facilitating group level financing. Charging commission on those is a matter under always periodic review. Priority remains, however, maintaining strong banking relationships. Dividends. We continue to engage with group companies regarding dividend flows. However, timing depends on their internal capital requirements and utilization. And customers, competitors, and USPs also you raise few questions. Major customers, leading steel buyers in India, export clients in frozen foods, and large FMCG players through contract manufacturing. Our competitors, regional steel producers in the segment of steel, frozen foods, domestic players in frozen snacks, and global exporters, contract manufacturing, large FMCG contract manufacturers like Hindustan Foods, etc. Our USPs, we are proud to say, diversified business and model balancing cyclical, non-cyclical, cyclical being steel, non-cyclical being food, established distribution network, you must be aware, strong relationship with global FMCG player. Capital expenditure and returns also raise one or two questions on that. CapEx will focus on selective expansion in frozen foods and efficiency upgrade in steel. That depends on the totally requirement. We target projects with IRR as a matter of policy. Okay, as a matter of policy, in line with industry standards, which you are aware, it ranges between 15 to 20%, and a payback period of 4 to 5 years. And again, our broad cardinal philosophy of the organization is that CapEx is calibrated to maintain financial prudence while establishing growth. Thank you so much. We really appreciate your concerns as well as the interest in our company. Thank you so much.
Thank you, sir. With this, we complete our speaker shareholder queries. Over to you, ma'am.
I now request members who have not cast their votes by remote e-voting to cast their votes by